Of Money on Motion video blog. This is Dan Perkins still with a cold. Happy New Year to you and to your family. Today I want to talk about the changes in the tax law that went into effect right about New Year's Day. There's a couple of things to look at. For example, if you as a household make less than $450,000, or if you as an individual make less than $400,000, your income tax rate will stay unchanged. If you make more than that, 400 for an individual, 450,000 for a household, your income tax rate will go up to 39.6%. Same thing is true on dividends and capital gains. If you're under the threshold of 400, 450, they'll remain at 15%. If you're over that, it'll be 20%. It's important to understand also that estate taxes have an initial exemption of $5.12 million indexed to inflation, which was a relief for almost all of my clients. And number two, the tax rate went from 35 to 40%, which means above and beyond $5.12 million, the government can take 40% of everything that you've spent a lifetime trying to build. But that's subject for another discussion. Now, in addition to that, we have the Obamacare tax going into place of 3.8%, so that if you're in the top $400,000 to $450,000 bracket, your rate's not going to be 39, it's going to be more like close to 43. What's important is that prior to the settlement, dividend stocks sold off. And they sold off because nobody could be sure what the rate of dividend taxation was going to be. They knew it was 15% through the end of the year, but there was some discussion to take dividends all the way to the ordinary income, which would have been 39.6, plus the Obamacare tax of another 3.6. So the dividends could have gone from 15% to 43%, or almost a triple. That didn't happen. At least it hasn't happened for now. So the way to look at how our portfolios did when the uncertainty of what was going to happen with the tax law passed, and we know what was going to happen, we could see that the most desirable assets to own were those that were going to pay an attractive income. And because for the vast majority of Americans, over 98%, there is no change, so they're still going to be taxed at 15%. So those, not surprisingly, were the sectors that recovered dramatically in the first few trading days of 2013. This is much like what happened in 2008, which I discussed in a previous blog, that the market sold off and people didn't know what was going to be the most desirable to own, and the realization that income was going to be the most important thing to own. And as a result, income stocks outperform the rest of the market. We have already seen accounts move back and recover almost everything that they were down by the end of the fourth quarter, and are throwing off extremely attractive returns. Now, we've got a respite here for 2 months. We bought some time on the sequester of hundreds of billions of dollars of spending on the part of the federal government. Now, this past weekend, Mitch McConnell, the minority leader in the Senate, said that the Republicans have given all they're going to give in terms of income taxes, and that we must move forward in discussing and dealing with entitlements and other budget items. So I don't know whether it's going to be true that the Republicans are going to hold fast and say no more taxes, and we have to deal with the budget issues and sequester by cutting the operating budget of the federal government. It's going to be a difficult time. In addition to that, about the same time we're starting to deal with the sequester issue, the debt ceiling will have been breached, and Congress is going to be having to deal with what are they going to do about giving the president more room with raising the debt ceiling. I thought it was interesting that on the talk shows over the weekend, Nancy Pelosi and other leading Democrats said that the president doesn't really need to come to the Congress to raise the debt ceiling. He can do it automatically under the 14th Amendment. Now, I said to you in a blog late last year that I was concerned that if the Republicans retained control of the House and the president was reelected, that if the president doesn't get what he wants from the Congress, he'll legislate through executive order or provisions that he believes he has the power to do. So we're going to have potentially a budget crisis, a financial crisis, and a constitutional crisis in about the end of February, early March, if the Congress refuses to raise the debt ceiling and the president does it automatically, believing that he can do it under the 14th Amendment. Now, the president has already said over the weekend that, or the White House speaking for the president said that the president doesn't intend to invoke the 14th Amendment. But we know last year when he was talking to the Spanish news media, when he told them in 2011 he didn't have the power to waive immigration rights, all of a sudden he did, prior to the election, grant, in essence, amnesty to millions of illegal aliens in the United States. So enjoy the appreciation and the recovery that we've seen in the portfolio over the near term, but stay tuned. Things could get really, really ugly around late February, early March. This is Dan Perkins. Thanks for watching. Should you have questions, please feel free to give me a call or send me an email. And as in the past, if you have somebody who's looking for help, please feel free to give them my name and number. Thanks for watching.